Evening, ladies and gentlemen. Warm welcome to or rather this month's episode of Corporate Connect. My name is Benjamin Gold, here at Research and Investor Education here at SIAS. This evening, we are very fortunate to have Skylink Holdings Limited join us. They will be the focus of our presentation this evening. So a quick introduction. So Skylink Holdings is a one-stop customer-centric commercial vehicle specialist with core businesses spanning vehicle leasing, hire purchase, financing, and engineering services. The group owns and operates one of the largest fleets of commercial vehicles in Singapore, serving a wide range of B2B customers, that's business-to-business customers. And then through its integrated ecosystem, the group delivers differentiated value and quality customer service throughout the life cycle of a vehicle. So if your company has got a requirement for a large fleet of well-maintained vehicles, Skylink Holdings is one of the companies that they will lease from. Okay. So as usual, we're going to have a market highlights first. Today, we're going to have Matthias Matt Chan, Head of Equities Research, as well as Maorong, Equity Research Associate from SAC Capital, joining us. Hey, Matt, how's it going? Happy New Year.
Happy New Year. How is it going? Ask the market. Is going well, isn't it?
Yeah, a little bit of a cliffhanger, right? Nvidia is coming out tomorrow, so yeah, we'll see how that goes.
Yeah, but Singapore is anti-gravity. We're talking about Singapore here.
Yes, anti-gravity. Yes. So good times at QDP and so on.
Yes.
Good to have you and your team here. So
Thank you.
Before we hand over the mic, so to speak, to Skylink Holdings, I'm gonna give the time over to you and Mao for you to do your market highlights. So you can take it away.
Thanks a lot, Ben. Thanks a lot, Sias. And very happy to be with Skylink, Wesley, and Leonard. As everyone know, we have been helping them, the good company, and we brought them to the market last year. Now, the reason why we want to be here for the first 10 minutes is that there's a lot of talk about that 5 billion. Now it's no longer 5 billion. Now it's 6.5 billion, right? They just added 1.5 billion for this budget. Hopefully, like CDC voucher, every year also got 1.5 billion. Right. Anyway.
We can only wish, lah.
No. I'll show you in a slide that it may not be wishful thinking, Ben.
Okay.
And that's the reason why the market has legs.
Okay.
But yeah, so Maorong, can you show the slide? So before we go in there, I wanted to quantify what's the big deal about 5 billion and currently the 6.5 billion. Let's do it. Okay, as he pulls up. So we just want to give an overview of what the MAS initiatives are. And that is, there's a supply, demand, and connectivity. So on the supply side, they want to do everything right. They want to make sure disclosure is okay. That's the boring part. I mean, not boring for SGX, obviously, but, as in just to get things straight. Then on the demand side, obviously the biggest number is the 6.5 billion being floated around, given currently 4 billion is given to 9 fund managers, and the remaining 1 billion over the course of this year, and the new 1.5 billion, some more, right? And they also have given money whereby companies will now have the avenue to hire IR companies. I suppose, in Asia, we have very good fundamentals. We are driven. We know exactly what to do, but we're very shy to say it. So hopefully these funds will give us a bit of an impetus. And then the connectivity, we're trying to connect with a biggie, Nasdaq, in the US, GEMS. And that's why Maorong is so hard at work, producing reports, making sure that the market knows what we are doing, because SGX has a grant which reimburses or subsidizes the work that analysts do. All right, next. Okay, on top of it, that one thing I wanted to highlight is that there are a lot of fund managers wrong. There are a lot of family offices that are coming into Singapore. If you look at option C on your right, that has been the game changer. In other words, if you bring meaningful money into Singapore, a meaningful amount must go into equities. In the past, it can go to everything in Singapore, your deposits, your blah, blah, blah. Now is Singapore equities, 50 million out of 200. And That is a game changer because then these family offices must focus on what brings them maybe wealth preservation, but regardless, it means that it needs to go into the market. Okay? All right, next. So, right, WTF. Maorong, I wanted to do the joke, but you went on already. So why why the fast? Okay, so what's the big fuss about the 6.5 billion? The entire SGX market, about 1 billion and a bit. Okay, next. Of which STI, which I think this whole MES initiative is not really into the STI 13, but that doesn't preclude them from investing there. I want to say that. But regardless, it is to find hidden gems beyond STI 30. So that easily is three-quarters of the market, of which then therefore one third is the remaining 25% is your other stocks, including the Next 50, which is an index coin by the SGX. That means below STI 30. Now, out of the 350 billion, it's not that every number is investable, right? Because as we know, in these companies, there are major shareholders. Even in big companies, there are major shareholdings, like in DBS, there's Temasek. But anyway, so our screening has shown roughly about 45%. So we don't split hairs. 50% owned by majority, the Tauke families and blah, blah, the major shareholders. Meaning, extreme right, 175 billion is the portion that you and I can put money in. Next month. What's that mean? So at 6.5 billion out of that 175 billion investable, it's already 4%. That means one initiative by MAS now moves the needle by 4%. But when MAS gives you that dollar, or not gives you, gives the fund managers a dollar, the fund managers are required to crowd in. That means bring in their own money from elsewhere. We don't exactly know what the ratio is. I've been trying to probe, but they've been very coy in telling me. But assume the ratio is 1:1. Suddenly, the needle moves to 7.5%. Okay, so that means 6.5 becomes 13 billion. What if it's 2.5? 2:1. 11%. That means more than 10%. One initiative by your agency moves the needle by 11% of the investable capital. I've said in other platforms, this doesn't quite move the needle. This actually breaks the needle, in a sense. So that's the reason why it's been so powerful. And that's the reason why investors have been so excited to want to put in the money. And truth be told, a lot of these funds have not been fully dispersed to the fund managers. Okay, back to what you're saying, Ben, when you say it's not CDC. Next. Okay. Koh Boon Hui, chairman of SGX, mentioned many, many months ago when EQDP was just a new idea out there. He was just mooting an idea and he made it very clear. It's not as if I've got special insights or somebody whispered to me something. But he says when the whole of ecosystem, including the government, wants to delve into something, in this case, is the R&D budget. Many of you on this call will not know anything in the 90s because you're too young. Nevertheless, this is between 91 to 2020. What are we trying to show here? That we wanted Singapore to be an R&D center. We planted 2 billion at the beginning and blah, 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 1, 2, 3, 4, 5. There have been 5 installments ever since, ever increasing numbers. I'm not suggesting, neither is anyone suggesting that is a much larger number going forward. But I think we have been prescient enough whereby this budget has shown that they have pumped in another 1.5 billion, meaning it may be the end or it may not be the end. So there are legs more to go. Yeah? All right, next. So what does it say? What am I trying to say? What are we trying to say in SAC? In a bull market, in a strong market, you do not need exceptional strong fundamentals. Sound fundamentals are enough. And we have identified for you 6 criteria. Look back in the past, have they been profitable? Hopefully, there are some analysts that have covered, so you know going forward whether they're profitable. And more of these analysts, more and more of these companies will be covered. Skylink is $50 million market cap. We are very bullish about them, and we cover them. In the past, anything below hundreds of millions of dollars, you don't see anybody even bothering about you. So times have changed. Interest cover more than two times, which means that you are comfortable in paying the banks. ROE at 15%, and then ROA at more than 5%. So all these are just benchmark numbers. So I'm going to speak a little bit now, but if you can just show us a little more fun, Maorong, if you can do the next one. Yeah, so people ask what is SAC, Cyrus Asia Capital, which is the brightest star in the sky. But actually, SAC stands for we got to do the final joke, Maorong. Sure or Chong ah. Yeah. So I think we are indeed in this market now. In all seriousness, I think there are legs, as you can see from the MS initiatives. You can see also the last few announcements by all the companies, be it your Moneymax, be it your Sunhawk. All these companies have reported record numbers. And so finally, I want to speak about Skylink before I hand it to you. I think we're past the time, but very quickly. Skylink, one thing that everybody must understand, Skylink is a leverage on bank borrowings. The banks do not want to do this business for various reasons, because they've got other ways in which they can make the loan book, and therefore that's why Skylink is in existence. For every dollar that you raise, you know how it is, like, for the banks only lend money to people who have money. For every dollar that Skylink has in equity, the bank will lend $9. And that $9 immediately will generate 40% margin. That is all I need to say in terms of from a research standpoint. So it's extremely scalable. Meaning, every time Skylink goes out and raise money, instead of investors going, "Oh, you're raising money, you dilute me." No, you should go, "Oh my goodness, that $1 translates into $9 in a very fragmented market." I'm sure all of you have read in the papers that all these uh, car leasing, car lending companies have all very weak balance sheet, have all closed down, and then there's all these troubles. Look at Skylink's balance sheet. They are in net cash position. They are raising money because they're going around looking for opportunities to acquire different loan books. And that's the power of the business model. Back to you, Benjamin.
Thank you so much. Very illuminating, so a much better picture of what Skylink does. And obviously, at some point, once they get to be very big, then we can start securitizing their loan books, and that's where the super fun stuff will start again.
Absolutely.
All right. Okay, but also it ties back to the need for companies like Skylink and the Next 50 to have very robust IR efforts, right? And that fits into the leveling up and EQDP as well.
Yeah, I saw Alex here. I mean, this is Alex, right? Alex Tang, which is the IR. He's been very quiet, but he's extremely efficient in raising the profile. But your point being, Benjamin, yeah, so you were saying by the IR and the value unlock, is that what you're saying?
Yeah, so that fits into the SGX strategy as well as the MES strategy of putting money into value unlock, because that pays for IR. Yeah.
Exactly.
Yeah. So I think more companies should take advantage of that now.
Yeah. And also, besides an external IR, they can only do so much. For the next 20 minutes or so, you will see how articulate Wesley is. I hope his heat doesn't come out of your screen, because this guy is so energetic. So every time, like when we were raising that 7 million recent placement, I didn't do any work like Wesley. I just needed the investor to kind of talk to you. That's all we did.
Thank you so much. I mean, provide a good platform for us to speak to the investor.
Yeah.
Well, it's always good to have senior management as the strongest advocate, right? I mean, that's authenticity. Okay, so thank you, Matt. So one of the most fun presentations for Corporate Connect I've seen for in a long time. Thanks for that.
Thank you.
Okay, so now we're going to move on to Skylink Holdings. Let me introduce you to Wesley Shen, Executive Director and CEO, as well as Leonard Tay, CFO of Skylink Holdings. Warm welcome, gentlemen. Thank you so much for joining us this evening. We are looking forward to your presentation. We already have some pre-submitted questions, and for our friends online, at the moment, if you have questions, please use the Zoom Q&A function to put in your questions, and then we'll get to it as time permits. All right, Wesley and Leonard, so if you're ready, you can take it away.
All right. So we're going to share the last slide first. Okay, so able to see the slide?
Yep.
All right. Good evening, all professionals and all investors. So we would like to have an introduction about Skylink Group. Okay, let's have a glance of Skylink Holdings Limited. It is one of the fast-growing integrated mobility service provider in Singapore. So the company was founded in 2017 by myself and my brother as the both co-founder. So under the group, under the Skylink Holdings Limited, there are three core business segments. The first pillar for the business is dealing with commercial vehicle leasing. We are one of the largest commercial vehicle leasing fleet operator in Singapore. We have more than 1,300 vehicles running on the road actively currently. The second pillar of the business dealing with is under Skylink Credit, dealing with all the motor vehicle hire purchase financing business. So currently we have the loan book about more than $66 million in as a date of September. And the third pillar for the business is dealing with Skylink Engineering. Under Skylink Engineering, it has three segments of business activity. Number one, it deals with the MRO, which is maintenance, repair, and overhaul of all types of vehicles. The second segment in engineering is dealing with the body and paint and accident claim business for all types of vehicles. The third segment is dealing with the commercial vehicle upper body customization engineering solution. So as of September 2025, we have a 6 workshop under in our current headquarter premises as Vega Plaza. So this is the three pillar of under Skylink Holding. So some of the major shareholders are PN Capital as the vendor and our strategic investor and chairman, Mr. Tay Wing Kwan. So we are the substantial shareholder. So under the business, we have proposed a dividend recommendation of 30% of a net profit after tax in the current financial FY 2026. Okay, so I privileged to share a little bit of the journey of myself and Skylink. Myself came from China, Guilin. I came to Singapore in year 2003 when I was at the age of 21. So I started the education in Polytechnic study and mechatronic engineering from 2003 to 2006. So when I graduated in 2006, I started my first career in SIAS engineering company, started as an apprentice aircraft engineer for 3.5 years and subsequent to become engineer. So subsequently, I switched my career path in 2012. So my first job in the automotive industry was working with one of the market leader, Borneo Motor Singapore, which is the distributor for Toyota, Lexus, and heavy-duty commercial vehicle, Hino. So Hino is a part of the Toyota group. So I'm working with them from 2012 to 2014. Subsequently, I joined another market leader, which is Gobel Group. They are the distributor for Mitsubishi trucks. So I worked with them from 2014 to 2012 to 2014 to 2016. So with these 4 years of experience in the industry, I built up my base and connection and the knowledge and skills. So I decided to start a business in 2016 as a one-man show. And subsequently, after a year of a trial to running the business, I decided to expand the business in 2017 together with my younger brother, who is the currently COO of Skylink Holding. So we rented a office and showroom, just a 3,000 square feet. Then started the business with a single business unit to dealing with multiple brand of a new and used commercial vehicle trading. And subsequently in 2018, we further diversify and expand the business into dealing with commercial vehicle leasing and commercial vehicle hire purchase financing solution. And in 2019, we further to build up and expand the ecosystem to set up a workshop to support the entire group of businesses for dealing with vehicle maintenance, repair, and in order to increase the efficiency and reduce the downtime and to manage the cost of the vehicle maintenance. So these are the entrepreneurial phases as to from one business unit to build up a enclosed integrated ecosystem from 2017 to 2019. And subsequently, we enter into the second phase of the business expansion. That's called a stabilization phase from 2020 to 2022. That's the time when the pandemic came. We see the demands and the needs on the vehicle on the last mile delivery and the e-commerce booming. So we tap on the opportunities while the COE was at a low cost. So we decided to adjust our internal strategy and then to focus on to grow the commercial vehicle leasing business arm. So during 2020 and 21, these 2 years, we scaled up the business from the fleet size of 100 over units to up to 580 units in 2021. And also at the same time, with the increasing of the fleet, so we grow the entire group of a business during that phase. And while progressively after the pandemic, so the economy recover and the business activity getting very vibrant. So the COE progress recover from 20,000 progress to go up to 30, 40, the highest go up to 80,000 of a COE. So during the time, we further to expand the business and we decided to have a second relocation to Vega Plaza, which where currently Skylink is the headquarters is located at. And with the COE increase, the asset value is appreciated. So the management make a very strategic decision for the entire fleet, 580 units. We decided to dispose 350 units and unlock the cash and value from the appreciated asset. Then we make a redeployment of the capital. There's we have another very rapid growth phase during 2023 to 2024. So we using the capital to redeploy it and then to further to expand the business. During the next few slides, I will share a little bit more details about this expansion phase. Okay, so for the management team, as I mentioned, myself started with the education in Singapore from polytechnics and subsequently during the phase of startup the business. So I further to continue my further education in SMAU to study executive MBA. And over the years, I think the company with the outstanding performance, we have won multiple awards from the market. Then on the right side is our core team for the higher management. So Mr. Tay Wing Kwan is currently the non-executive chairman. So he is the strategic investor and a chairman of several public listed company on SGX and Hong Kong Exchange and Australia Exchange. So he has a strong background in corporate finance and corporate investment and M&A. And Mr. Leonard, he has approximately 30 years of accounting and finance and corporate tax and management experience. So and Johnson is the co-founder of Skylink Holdings. He has more than 8 years of automotive industrial experience, a strong execution in the business operating. Okay, so this shows some of the big account they call some of the main customer, well, big name customer that Skylink currently is serving. Okay, under the Skylink Holding, there are 3 pillars of the business. So commercial vehicle leasing is the first pillar of the business. So as shared earlier, from 2018, when we diversify, expand the business to start grow the leasing fleet. So we, during the pandemics, 2020 and 21, so we grow the fleet from 100 over units to up to 550 units, 580 units. So you may, from the charts, total fleet size, you may see we made a strategic disposal of asset of 300 over units, then unlock the cash. Then subsequently in 2023 to 2024, we redeployed the capital and further get banking facility support from all the bank and finance institute. Then we use the capital and the facility. We during second half of 2023 to first half of 2024, we acquired 3 leasing company fleet via mergers and acquisition, and progressively to grow the fleet to from 200 over units to 900 units, and further in the from 2024 to 25, then we grow the fleet size to 1,200 units for March of 2025. Then as a current number that we have the total fleet size about more than 3,300 vehicles. And most recently, then we made another strategy acquisition of 132 unit of a commercial vehicle in December, and the whole acquisition was completed in January. So under the all the vehicle, most of the vehicle are under long-term leasing contract, 1 year and above. The second pillar of the business under Skylink Holding, which is a Skylink Credit dealing with motor vehicle hire purchase financing. So the table itself, the chart, it shows briefly to share how the business model is working to in terms of utilizing of the capital. So when we inject with the injection of a capital of the 100,000, we are able to take on the banking facility of a broad discount facility of 90% loan to value. So which means that every 100,000 we deploy our own capital, we're able to leverage on the banking facility of 900,000, which will add up a combination of $1 million of a loan book size, which will generate a revenue of $76,000 with the effective interest about 7 to 8%. So while the interest cost is range for about 3.5 to 4% of interest cost, that take out the $37,000 of interest cost. So that allow us to generate a gross profit of $39,000. Then to minus off the overhead cost of $7,000, so which bring us $32,000 of a net profit. So with every injection of 100,000 cash, that able to generate 32,000 of a net profit, which will bring us to ROI of 32%. So and then on the right side, it shows us the milestone during the FY23 until current. As mentioned during the FY23, after the disposal of the fleet, and then we able to unlock more support for the banking and then redeployment of capital. We grow the loan book from 24 million to 60 million from FY23 to 24. And then subsequently in 25 and 20, currently first half of FY26, we maintain a moderate growth for maintain the loan book size about $66 million. Okay. All right. The third pillar of the business is Skylink Engineering. As a share, Skylink Engineering mainly dealing with the 3 segments of business. Number 1, dealing with MRO. Secondly, dealing with body and paint, accident claim. Third is engineering. So recently, we have signed a 2-year service contract with SBS Bus Transit to supply labor and material for bus body repair. And we also work as the main contractor for one of the depot, Ulu Pandan bus depot, that house about 500 public buses. So we also signed a 2 years service contract, which providing comprehensive maintenance package to one of the blue chip customer for F&M Foods to provide MRO comprehensive maintenance package for them. So at the same time, just recently, we also signed a new lease for a B2 industry property at Jurong Port Road that built up area of about more than 15,000 square feet, that almost a double of the current size of the engineering specialist workshop area, up to 33,000 square feet. So these places allow us to bring the double-deck SBS buses and then able to do the body and paint and heavy vehicle MRO service activity. So engineering, the initial intention was the cost center to support the entire ecosystem. We post-listing with more resources that invest in the business for expansion. We will transform the business from a cost center become a profit center. So we progressively to taking more tender contract and blue chip customer, and then to further expand the business activity. At the same time, most recently, in December, we made the announcement to execute a strategic acquisition of a bodywork customization specialist. And we have made the announcement for the completion of the acquisition in January. So this bodywork specialist operator is a Chuanli Partners. They established it in 2017. They are specialized in design, manufacture, and installation and of customization of upper body structure for all the commercial vehicles. So this acquisition further expand the group's engineering capacity, also acquired talent pools and customer base to have a better, strong support to our commercial vehicle bodywork customization solution. So this is a aligned interest to a base and profit target defer consideration, then the payment structure. So the formation of a strategic joint venture with Chuanli Partners is key management team. So to support the entire ecosystem. Okay, so the next few slides will mention about some of the key financial highlights for Skylink Holding. So I would like to pass the mic to my CFO, Mr. Leonard Tay.
Hi everybody. Good evening. I will just take a very quick run through with all of you about some of the figures, which some of them have already announced. So if you are able to look at this simple chart, you could see that we have been able to maintain a good CAGR growth of about almost 78% for the past few years, without any capital, which we have to rely on our own capital on every money that we earn to recycle the capital. So from that angle, you are able to see that we are able to maintain a quite high ROE. And for the first half result, if exclude the first year RTO effect, RTO effect cost is just like a goodwill cost that due to RTO we have to write off. So exclude all this effect, you could see that that is a good growth for our revenue, gross profit, and then translate to a bottom line of increase in our net profits. If you zoom into very details of our GP margin and the component of each three model of the business, as Wesley has explained, three business model have distinct model and income driver that actually and different characteristics that actually drive the performance of the company. So if over the 3 years, if you and the recent 1H, you could see that two entity business model that has been driving a very high GP margin of almost 50%. So engineering being a company using a very low cap, then we are able, because due to reliance on the labor and then with a good service, so we are able to maintain quite good margin of average about 50%. And then this margin percentage is quite aligned with the industry standards, which even go to our Chuanli Partners, we also able to see this maintenance of this GP margin of over 50%. And if we look at the credit business, which rely on the capital, so due to income spread, and we are able to maintain a quite good GP margin. The illustration that just now Wesley has shared is just based on the illustration on the interest spread. But due to the nature of the credit business, we are able also to earn some fee-based income on this maintenance on all this loan book. So we are able to maintain a GP margin of about 40 to 50%. And then if you look at the funnel, the Skylink Vehicle Rental being a funnel, which they have also bring in the business, and then we have able to maintain the margin of about 16%. And then having take into account all the depreciation charges, repair charges, and all the interest costs. So after we take in all these costs, so we still maintain about 16% of our GP margin. So based on these three business model, we believe in income stream that can give us visibility. So that's why under the Skylink Credit and Skylink Vehicle Rental, being vehicle itself is a quality collateral, but another protection to the company is a contract. Having have a good legal system in Singapore, we are protected by the legal obligation of all the contractual obligations signed by the lessee or signed by the hirer. So having signed all these contracts, so it will give us some visibility of the revenue. So on the left side, you could see that this is called commercial vehicle leasing segment, which a lot of our lessee, when they sign the contract with us, so we always look for long term. More than 1 year is considered long term for us. So most of them, they will sign 1 year, 2 year, 3 year, up to 5 years. So when we have this signing of the long term contract, so the lessee will be bound by the contract obligation. So they have to fulfill complete the agreements. So if you look at the revenue income for the leasing, so within 1 year and 1 year and above, you could see that with the increase in fleet, so we will having improvement in all these leasing income, which minimum 1 year is for the 1H2026 is about 16.6, and then total all the contract minimum, because minimum lease income is about 25 million. And then on the other side, on the credit business, the hirer that signed the financial HP agreement with us, they also need to sign HP contract. So they also give us a certainty on the interest spread income. So with improvement in equity earnings, and then with the recent this capital raise in September, so you are able to see that the gearing has been reducing. And then as what Matthias has already said, we love leverage. So when we are not a list co, you could see that we have actually enjoyed very high this gear level because due to the nature of the collateral of quality asset, which is most of them are all the commercial vehicles, which the company rely on the commercial vehicle to do business. They use the commercial vehicle as a tool. So bank is very supportive on the financing supports. And when with the 1H, which we already raised the capital, so you could see that excluding the RTO effect, our gearing level has dropped significantly to 5.6. And then with the recent placement exercise, we are actually seeing the gearing actually going down further. Having said that, we still love leverage, but the companies actually have maintained a right target for our gearing level to balance between the growth and the risk.
Yeah, don't mind me saying, right, Leonard, this is not gearing or risk for the sake of it, but it's because it's an operational
Yes.
necessity.
Yes, because yes, it's a thanks for point out. For all the quality assets, we view it as a very liquid asset because they are part of the ordinary business to acquire, dispose, replace, and then to generate a stream of income, which is with a high visibility due to the contract protections. So we view ourselves as a service company that monitor cash flow, and with this income stream visibility on the revenue from the rental and the collection from the hire purchase, and then more so for the Skylink engineering that doing the MRO and then deal with all the blue chip customers. So the collection is very healthy. So you could see that we are able to maintain a healthy improvement in the cash flow. So if you look at the three business model together with the ecosystem of the whole wider Skylink, which on the left you could see that there is a commercial vehicle rental, Skylink Credit and the Skylink Engineering on the left, and then on the right is other entity that under the wider Skylink Group, which Skylink Auto deal with trading of the motor vehicles. So when Skylink Auto, when the customer go and buy the vehicles, then they just go for the Skylink Auto. So if the customer believe in sharing model of leasing, so the customer will channel to the commercial vehicle leasing. So if Skylink Auto customers that they buy the commercial vehicles and then they need the alternative financial solution, which is Skylink Credit is widely able to support them with a HP loan. So Skylink Credit will be able to provide these financial supports. And if the Skylink Auto customers they use a commercial vehicle, they need the support for the after-sales service on the repair, maintenance, and overhaul. So the customer will go into the Skylink engineering. So on the wider Skylink, which all the customer leads from Skylink Auto, Skylink Car Rental. Skylink Car Rental is a small company that deal with some small fleet of passenger vehicles. And Skylink Insurance is another small company that deal with insurance agency. So this customer, when they have all these needs on a commercial vehicle, they all will also channel to Skylink Engineering to do the servicing and the after-sales support. So with overall, you could see it is a scalable business model that support and then reinforce each other. And more importantly, when the capital and the profit is earned, then it will go through the whole cycle and then recycle the capital and then recycle the cash. Yeah, with that, we end the presentation and then we wait for the Q&A.
Thank you very much for that, Wesley and Leonard. So very illuminating. I think you've already answered one of the first questions, which is basically what are the core revenue drivers. I think you had one or two slides with that, the one with the, they call it nowadays the pie chart. I can't remember what it's called. Okay, let's move on to the next one. We have a question here about the operational as well as industry risks facing Skylink Holdings. Can you add more color to that?
Yeah, like that. Okay, let me take these questions. Okay. Okay, having said that, because our main focus is basically a commercial vehicle. We differentiate ourselves very well that our focus is commercial vehicles. So if we look at the risk, the biggest risk should be the government change rules. If they change because motor vehicle in Singapore is rely on the COE quota, and then the change rules on the government on the green initiative, all these things. So having said that, this is a biggest risk for us. Also, it's also a biggest opportunity for us because we can see that for the past many years, government has been very supportive on SME, on their commercial vehicle usage, on their business costs, on all this. So having see that this is a risk, but also give us a lot of opportunity, especially government has actually embarked on green initiative to giving a lot of rebate for the business user that they go and buy a commercial vehicle and then change on the EV adoption. So government actually gives them support.
Okay. All right. So regulatory risk is the biggest risk.
It's the biggest
for you
risk.
guys. All right. So I'm curious because it's leverage, right? There are a lot of bank loans and all that. You didn't talk about things like interest rate risks and all that. I suppose that's.
Oh, yeah. Let me cover this because this is not why this is not a risk for us because for our business, commercial vehicles, the nature of this product is very unique. And then in Singapore, it's even more unique with the COE system. And then the commercial vehicles, because all the business users actually take this as a tools. So the commercial vehicle user, they will actually maximize the lifespan of the commercial vehicle until the last mile that the vehicle cannot move. So then if we do the financing, normally when we say that is because if you look at the vehicle lifespan, over the lifespan of 20 years, the vehicle keep recycle. So let's say one of the users that when they sell the vehicle, another user will take it up. And then for us, for like a leasing company, we always will maximize the lifespan through our maintenance engineering arm that keep the lifespan of the vehicle healthy. So even though we go for the or even the higher that they because they buy the vehicles and then they borrow from the bank. So bank, because this is the quality of the collateral, bank always give us quite friendly interest rate because they are quality collateral with the guarantee lah. So when we actually in turn lend it out to the hirer, we always will actually enjoy good spread. So even though its interest rate go up, then we will actually cushion it back and then recover back from the hirer. So it actually happened for the bank as well. So when the US actually adjust the interest rate go up, then they also go back to the market to adjust all this. But when the interest come down, the market take time to actually adjust because in the market practice, especially for the pre-owned vehicles, this is a segment that bank normally not don't want to compete. So they will actually let us like us that actually provide the alternate solution. So we can actually still lend it to the all the business user at a certain rate that not so fast adjust. So having said that, at all time we actually can enjoy a spread that is almost double. So at least this is a minimum. So interest rate for us is not a threat. It's not a risk. Instead, it becomes an opportunity. Yep.
Sounds like your business model is
Very
quite close to
agile.
a bank yourself.
Yes,
You just make
especially this is
net
a part
interest
that
income.
we actually see ourselves like a pillar that support the bank growth also because we are like an alternative financing solution for the especially SME. We see ourselves as an SME enabler because a lot of SME, although they have a decent business, but they may be actually bind by a lot of rigid rules on the bank. Especially bank also don't want to touch on this pre-owned. Pre-owned, as what I said, some vehicle even 5 years, 7 years, 10 years, the the vehicle still moving on the road, and then people will still transact.
Okay. There is a question here since we're talking about risk, right? There's a question here about the carbon tax. Do you guys view it as a risk for your business model?
Yeah, we view it as because of a carbon tax. So government actually put in a lot of initiative to encourage corporate to change their old diesel polluted vehicle to EV. So a lot of big corporate, we actually see this trend, and then we see this as an opportunity because we see a lot of all these corporate that they earn, let's say they earn big fleet of commercial vehicles, which is not so green. So they may actually intend to change. So when they change, so we are the beneficiary because we have to provide this service. So some of them, they even call for tender that they want to change to a greener fleet. So, and then as an asset owner, as what just I said, we actually enjoy a lot of rebate from government on this green initiative. So we can actually, as an asset owner, which we partner with them, so as we rent the vehicle to the customers. So we can actually enjoy rebate from the government incentive.
So actually, the government 3-4 years ago already started to implement the commercial vehicle emission scheme to provide started from 30,000 grant for each purchase of each commercial vehicle from during COVID time about 2022, and subsequently now with the current year 1st of January 2026, the government also roll out initiative for encourage the business operator to transform and change the diesel vehicle to electric commercial vehicle. So it is called heavy vehicle zero emission scheme to provide a $40,000 rebate on each purchase of a heavy duty commercial vehicle. So upon registration, they'll give a discount of 13,000. Then subsequently in the first anniversary after the registration, to give out another 13,000 of a rebate to the vehicle owner. And after second anniversary, to provide another additional 14,000 of rebate. So add up total of a 40,000 discount for each unit of a purchase. On top of this, the business owner, when they purchase one heavy duty commercial vehicle, they are eligible to apply the government grant for 50% of a subsidized by the government up to 30,000 per DC charger. when they purchase one heavy-duty commercial vehicle. So this is an initiative to roll out January this year. So although just 1 month passed, I mean the entire the company will already secure quite a number of contract in terms of leasing and sales of a commercial vehicle, and then to help them to provide the support on the DC charger installation and maintenance. So this is aligned with the government direction to go green and to reduce the carbon emission for the climate, and so that's why we are aligned with that, and then we are able to tap on this government policy to go green.
Yeah, having said that, if you study the government green initiative or this, and then especially if you look it clearly on the government direction, there's just a separate commercial vehicle and the private vehicles. So if you look at the commercial vehicle, government recognize that commercial vehicle business user, they need time, and then they need also diesel engine power, and then they also need a lot of infrastructure to be ready before all these business user they will actually go and switch to the EV. So you could see that the emission that applied to the commercial vehicle is actually longer. So they actually allow the commercial vehicle user, especially on the truck, you can still register the diesel vehicle. Like a truck, you can register the EV with a rebate. But if you register the diesel truck, you are still not penalized. But for the van, because they see that this is something that is light, so they actually change some rules on the this diesel light vehicle. But for us like operator, we just go along with the government initiative. So if the government initiative give EV rebate on the light vehicle, then we'll wait for the public for the commercial vehicle as a demand prompt, then we'll actually adopt accordingly. So we are not so-called like want to cannibalize our revenue growth in our diesel. We still grow as usual according to the user preference. Yeah, because the public still preference that they still think that diesel power give commercial vehicle more power.
Okay, so it's demand driven,
Yes,
and
demand
obviously
driven.
less risk on your operational business
Yes.
model.
Because
Okay, that's good.
Yep.
All right. So there's a question, or actually there are 3 questions here about your competitors. All right. So who are your key competitors, and how does Skylink Holdings compare to Gobel and Ethos in the commercial vehicle leasing space?
Yeah, actually, we are the youngest and the most fast growing company in terms of commercial vehicle leasing in the market. So we are ranking the top few. So as you mentioned, those names like Global Leasing, Ethos, and Pan Pacific Leasing, those are the within the top 5. So they are our main competitors. So actually, in this business, the product that we lease to the market, I mean, among all the leasing company, the vehicle, a Toyota, either is a Toyota, a Nissan, a Mitsubishi, or any of commercial vehicles, we are using the similar make and model of the vehicle. So the core competitive advantage for the business is a service provider. So it is how we are able to cater and customize the customer's needs, because deal with business, a different segment of a business industry, and the needs of a vehicle, the type of vehicle are different. And how are we going to provide the solution for them? Then number 1. Number 2, whenever they need a vehicle, for example, how to maintain a healthy and roadworthiness of the vehicle, that which come to us have a strong ecosystem, Skylink Engineering, to provide the all-rounded services for the needs of vehicle, either on the MRO, body and pain, accident claim, all this. And at the same time, we provide 24/7 roadside assistance to one-to-one replacement of the vehicle. At the same time, we will train our team, either the sales team or the after-sales team financing, how responsive enough to cater and service our clients for the need to maintain all-time smooth conversation. So all this is add-on to provide a comprehensive and full service to our clients to fulfill their needs. Because in terms of time efficiency to the business operator, it all is about cost and revenue. So help them to save time, then to maintain a reasonable cost for the business and maintain a good efficiency. That's how we maintain our position and strengthen our market competitive advantage to maintain the business stability and sustainable growth.
Mm. Okay, thanks for that. All right, let's move on to, okay, there are a couple of questions about the financials. If you could go back to that previous slide where you had the debt to equity ratio as well as the net debt figures.
Let me go back.
This one, yes.
Yep.
All right, so the first question is that the net debt value is higher than the net book value, as well as the loan book. Sorry, the loan book. Yeah.
Okay.
So the question is, so if you take out you take the net debt minus the loan book, right? So you've got a difference there, right? So what are the other types of loans that you have that goes into the net debt, the net
Okay,
debt number?
the net debt is derived after we take the debts minus the cash. So this is then is actually on the other side is actually represented by the two pillar, the asset of the two pillar, which is the net book value of the motor vehicles. Because we are actually asset owner, which asset owner is like is operating lease. We own the asset, then we lease it out. So under this situation, we own the asset, we own the motor vehicles. And then when we own the motor vehicles, we may have bought this motor vehicle maybe 2 years ago, 3 years ago, 5 years ago. So we run down the depreciation come down. So that's why in the book you could see that there is an asset, big asset, which called net book value of the motor vehicles.
Yep.
On the other side, we also got another asset called financial assets. This financial asset is our loan book. So which this is a finance lease, which the asset is actually owned by the customer. We are just lend them the money, which in turn we actually block this financial asset to the bank.
Yep.
So that's why we can enjoy very low interest rate, but at the same time we got a spread. So that's why this part our asset is called loan book. So because
Got it.
for the credit company, they always measure the company by loan book size. So that's why this two is our main asset. So
Right.
so that's why it's just the asset is on the other side of the under part of the total assets. So net debt is just is a subtraction that become 92.
Yep.
Okay.
Okay.
Mm.
All right. There was a very specific question about the debt to equity ratio, or the same slide, sorry.
Okay. Mm.
So the debt to equity ratio was 5.67
Okay,
in
5.67 because if you look at our total group equity, because this when we present this one is actually on the console level, which we actually have actually minus of almost 10 million of goodwill, which due to LTO effects. So that's
Yep.
why it derived the total equity is about 6.3. But in fact, this is we call it non-cash event because it's just a console. So at the account, actually on the banking level, which bank actually look at every company at the company level. So if you exclude this LTO effect, the debt to equity ratio is about 5.67. And then with the recent placement about 7 million, we actually see that this debt to equity ratio is actually fall down to almost 4. So having said that, as what Matthias totally understand our mission, we love leverage, but having become a listed co, we also respect capital very well. So we want to manage a a balance about this so-called gearing level, because if we manage this gearing level very well, it will translate to a very high growth, high return, high ROE for the company. So, but we still need to balance. Yeah. So if you look at the past historical bank, actually, when we are not a listed co, when we just youngly, for the past 7 years, we put back every capital, recycle it, that bank actually give us very high leverage because of the asset collateral risk. Because we are, as what just I said, is protected by the commercial vehicle product, which is very dim low risk for the because mainly it's used as SME as a tool. Because when come to payment, they have to rank the payment of the commercial vehicle number one. Yeah, because without a vehicle they can't do anything. even fetching their staff on the lorry, they also can't do it. So they have to rank us number one on the payment.
Okay. All right. All right. So there's a question here which is kind of similar to the carbon tax question. So this question is about the COE, right? So COE prices are basically up and down now, all over the place. So how does that impact? What is the effect of
Yeah,
changes in
let me
COE prices
take
on your
this
business?
question because if you look at the COE trend, you will see that all the up and down actually happening in the private vehicles. So you could see that a Cat A, Cat B, because a Cat A, Cat B, the use of the vehicles is totally different from the commercial vehicles. And then commercial vehicles, they are stably, you could see that almost 2 to 3 years, the COE is actually quite stable at the range of 65 to 75. So the COE cost for the commercial vehicle relatively is very stable. So that's the reason why we actually built out the fleet in the past 2 years, because we actually see the trend, and then it actually proven that the trend is around there. So you could see that the COE actually there is a spike in the early 022 because that is, as what just now Wesley has already explained, is a post-COVID. A lot of people just suddenly go and buy a lot of vehicles, then they jack up, and then but limited by the quota, so they actually jack up the COE at that point of time. Even that time, they go into the highest, they go to 80 to 90K, which is almost 3 years ago. So that's the reason why we actually dispose of the over the period certain vehicles. Then we cash out and then we redeploy. Yeah.
Okay. All right. I think time now is 2 minutes past 8. I think we'll just take one more question. All right. So let's see. Okay. So there's a question here about the MRO business. So can your MRO business acquire Chunli, perform what listed Wong Fong Industry does?
Wong Fong, yeah.
Yeah.
Okay.
Is it one of your competitors or?
Yes, they are. Yeah.
Okay, one phone industry, they are in the market, I think, relatively more than 3 to 4 decades in the market. So they are a similar company that dealing with they do the customization of heavy duty truck upper body, such like deeper truck, the lorry crane and hood lift, and all type of heavy duty vehicle upper body customization. So that's a kind. And recently, they also expanded to deal with the lighter vehicle of a body modification. So Truangli, the target that we acquired, actually they are in the similar and same industry and similar business activity. It's just the skill are probably a bit different. So Truangli probably is a younger version of Wangfu Engineering. So we for Skylink, this is a strategy acquisition. Yeah. So that will add on our ecosystem, under the larger Skylink ecosystem, we have a transacted a few hundred vehicles a year, and then plus we have owned 1,000 over vehicles under the leasing fleet, and then progressively we are still growing. So with this acquisition of Truangli, they were able to provide all that needs that the vehicle that we lease to the customer and cater for the customization needs for them. At the same time, through the acquisition, we acquired talent. So the company has grown to 10 years since 2017, nearly 10 years. So they have about 20 very experienced and skillful technician and mechanics that dealing with all those technical works. As I mentioned, I mean, even nowadays, AI, I will talk about technology, all these things, but certain things are still not that easily to be replaced by human and skillful people to handle such engineering solution.
Yeah, but I mean, you still need somebody to crawl under the truck to fix a leak or something, like you can't get
Yes, it is.
Yeah, my iPhone can't do that yet. Maybe another 15, 20 years. Okay. So that's all the time that we have for. So thank you very much, gentlemen. Thank you, Wesley. Thank you, Leonard, for joining us. So your answers were very illuminating. So I want to thank you. I want to thank SAC Capital as well, Matt, as well as Mao for giving us the presentation. So we hope that you have found the information or the session informative. In case you miss any part of today's session, you can rewatch the webinar on SIAS YouTube channel. Do visit our website and follow us on the usual social media channels, Facebook, Instagram, LinkedIn. Our next Corporate Connect session is going to be on Tuesday, 3rd of March, featuring Capel Oak US REIT. So do remember you need to register and you can join us for this evening. So again, thank you very much, Wesley, Leonard.
Thank you, Ben.
Thank you,
Have
Ben.
a good
Thank you
evening
very
ahead.
much.
Thank you, Matt.
Thank you, Matt.
Thanks.